Welcome. This is Mike Connor. We're glad you're a part of our Innovation Trailblazer webinar series today. Today we're going to dive headfirst into embedded insurance, trends, design, and development, and what it takes to bring these things to life. We've got some amazing speakers with us today, so I'm sure you're going to enjoy those. I'll just remind you that we have Q&A available. We'll try to take that Q&A as we go throughout this. We're not likely going to get to all of the questions given the size of the audience we have today, but we'll try our best, and if we can't get to them during the webinar, we'll get to them offline. Our goal today is really to give you actionable insight that will help you basically either refine the work that you're already doing and or help develop a business case to get this work underway. I'll do a quick intro, then we'll ask Denise to step in and give us kind of an overview of some of the key business drivers and trends that are driving this market segment. We'll go through and talk about some of the solutions out there that we think are really kind of on the leading edge of things. And then we'll dive into what it takes to implement these, some of the challenges that people are encountering and the best practices they're using to work through those. And at the end, we'll talk about what it takes to develop and present an effective business case to move forward on this within your company. This is part of our overall Innovation Trailblazers webinar series. We're doing a number of mini-series on different topics. You can find more about that on our events webpage at SVIA accelerator.com, and encourage you to go there. If you are interested in speaking or sponsoring on any of these, we'd love to talk to you, so you can reach out to me directly on that. I want to take a quick opportunity here to say thank you to Denise and Majesco. They're a platinum sponsor for this and a number of other webinars that we're doing. Denise has been and Majesco have been a supporter of ours for almost, well, more than 5 years now. So really appreciate that. Without that sponsorship, we couldn't be doing this work. We think it's essential to the community, so thank you for that, Denise. And now what I'd like to do is have our speakers introduce themselves. Denise, let's start with you.
Hi, Denise Garth. I'm the Senior Vice President for Strategic Marketing. I'm responsible for global marketing as well as strategy at Majesco. We are a core systems, digital platform, and data and analytics provider to both P&C and the L&A industry. So looking forward to it, Mike, and it's been a great partnership for 5 years.
Great, thank you, Denise. And Herman.
Hi, my name is Herman Frieds. I'm broadcasting from Europe, Vienna, Austria. I'm Managing Director and Chief Insurance Officer of a Vienna-based insurtech called Insurance. We're licensed for all countries in Europe, and we are specialized in B2B insurance solutions at the point of sale.
Great, thank you. And Alex.
Hey, I'm Alex Maffeo. I'm the founder and CEO of Boost Insurance. Boost is an insurtech startup in its own right, but we work closely with other insurtech startups and other technology companies that want to offer branded insurance products to their users. We're an MGA by trade with a dedicated reinsurance facility to support all of our programs from both a capital perspective, a compliance perspective, and a technology perspective. We've built a purely back-end API-driven policy administration system that our partners on the distribution side can integrate with to automate all of their workflows and embed the insurance transaction within their front-end environments.
Great, thanks, Alex. And Mariah.
I'm Uriah Kaplan. I'm the CEO of ProtoSure. We created a no-code platform to allow both existing carriers and new entrants to create insurance products and distribute them not just internally, but through embedded practices and through partners.
Thank you. All right, let me share my screen again. Where did it go? All right, you guys seeing my screen? Yes. Good. All right, so I'm going to give a quick overview and then we'll drop into this. So I'm going to have Denise dig a little more deeply into the definition of embedded insurance, but basically this is an insurance that's covered, that's bundled with other products and services, and Denise has got some more information she's going to share with you on that. the bottom line is that change is coming to our world. And I think a number of things are driving us and setting us up for this kind of an embedded insurance offering. And that includes the fact that a lot of the world is trying to move from a product model to a subscription and service model. And I think that the beauty of embedded insurance is it fits perfectly within many of those offerings and models. In addition to that, according to several researchers now, COVID has accelerated our digital economy by almost 5 years, if not more. And that means more people are online, more people are conducting transactions online, and more people are doing exactly what we're doing right now, which is working remotely with each other. So the net is all of that has pushed what we're doing digitally forward pretty dramatically. And I wanted to provide this quote. Basically, this is from Sir Ian Davis, who was head of McKinsey for a long time. But he said, for some organizations, near-term survival is the only agenda item. Others are peering through the fog of uncertainty and thinking about how to position themselves once the crisis is passed. I think this was written about 5 years ago. But I think it's incredibly relevant today. And I think that embedded insurance fits exactly in that category of peering through that fog of uncertainty. What we're seeing is a major shift in a lot of values and behaviors out there. I'm not going to go through all these. Denise will cover more of these. But basically what it's doing is setting up what does it take to survive as a company and thrive as a company in this new digital economy we're heading to. So clearly online, clearly demonstrating value. Agility has got to be there. Being a trusted brand that people believe in and trust is critical. We're going to see more and more divestitures and acquisitions as people structure and restructure their businesses to do this. You have to move quickly today because things are accelerating. And the other thing is you have to take bold steps. We also know that we're facing potentially a sustained economic downturn. And we also believe that this is going to change industry sectors and blur boundaries between them even more than has happened before. So all of these things, when you're thinking about where you want to be as an insurance carrier or as an insurtech or as a company that's supporting these guys, you need to take that into consideration because these aren't just hitting insurance, they're hitting all the different industries out there at the time. So from my perspective, this is a great time to rethink, reimagine, reinvent, and potentially look at disruptive things rather than wait to see what the rest of the world is going to do. Because if you do that, you'll be kind of sitting back behind the power curve. The net is the new digital normal has just arrived, whether we like it or not. And what that means is from a digital transformation standpoint, we have to start thinking a little bit differently. So all the short-term things we need to do about aligning costs and increasing productivity in key areas of our operations, those are all important. Accelerating enterprise scale digital transformation, all important. But most important, I think, is going to be really setting aside time and energy to think about how are you going to differentiate yourself in a digital market that's coming ever faster. And what are the innovative solutions out there for the new digital normal that you can bring to bear? And how do you basically start to identify the digital ecosystem partners that will help you do that and bring value-added business models and services to market or be a part of those? And I think that's, again, the role of embedded insurance. In terms of where you want to focus, I think what you'll hear today through the panel and what we've seen through other companies that are doing this work is they're really kind of focusing on areas of opportunities that have to deal with both personal outcomes and high value objectives that we have as individuals. And the same is true for business. You know, where are the high value business outcomes that we can bring this kind of capability to bear on and make this much more accessible and much more relevant for them and timely. The other thing that I certainly believe is that, you know, change is coming to the customer agent and insurer relationship. I don't think agents are going to go away. However, I do think as we start to see people reach in and start to build relationships within these digital ecosystems, that those boundaries are going to get a little more blurred, and we're going to see other alternative capabilities and channels come on stream that will allow us to go after this. So we see insurance as ultimately having to embed itself in these digital ecosystems surrounding insureds so that they can be there at the point of need with a relevant value, whether that's content and information to help people form decisions or understand their situation, and or actual products that help them address those, or solutions and services that help them address them. So we think insurance has to be out there where people have the need. We see insurance as a bundled component of the services and platforms and solutions that are out there. And we see more and more of that starting to take place as the major, the digital leaders in the industry basically move on this opportunity. I'm not going to go through all these, but here's a host, and I'll share these slides with you. You can look these companies up later on, but these are all companies who are doing work in this space right now, including some of the folks that we have with us today, and we're very grateful for their input on this. But this work is happening right now, and there are major insurance companies working on this. So, you know, basically insurance is a bundled component. You know, some of the major players in the world are doing this. So BMW, Tesla, Ford, we're all offering embedded insurance products now. We're going to see more of that. Just if you kind of break apart the auto and home digital ecosystem and say, geez, where are there opportunities for us to play in this? Where are there touch points within this digital ecosystem that we could bring value and engage customers and create new products? There's a tremendous amount of them out there. So I think there's opportunity for, and this is just the home and auto ecosystem. There's other examples I won't go into, but all kinds of opportunities to reach out and be a part of these ecosystems and bring value to it. So that brings my opening intro to an end. And at this point, I'm going to turn it over to Denise. So Denise, if you could share your slides.
Okay. So I've got to go back up. All right. So welcome everybody, and looking forward to it. I'm going to provide a perspective here. We've been doing primary research with consumers and small medium business owners for almost 5 years now. And each year we take another kind of cut of the data or dive into a specific area. This year we dove into specifically auto and also life, wealth, and health, wellness. So both of those reports have recently been published. And they really tie into some of the expectations from our customers with regard to embedded insurance. And I'd encourage you to take a look at those. What's really driving this is the customer. At the end of the day, the customer is much more in control of what it is that they want to do and how they want to do things and what they want to buy, when they want to buy, and what they want to buy. And in many cases, you know, we have really as an industry kind of bundled up based on how we thought the coverage should be. You know, an auto with a set of different coverages, life insurance with maybe a number of different writers. And today they may be wanting it as a single set of coverage, or they may want it embedded into the purchase of something else. At the end of the day, what it all is about is it's to make their lives easier. How do they manage their lives through all the different ups and downs and the different things that are going on in their lives? And thinking about it instead of a policy transaction, we've got to think about it as how does what we offer as a product really create a different kind of customer experience? So when you think about embedded insurance, what I talk about is that it really gets back to the customer once again. And what we've often said as an industry is insurance is sold, it's not bought. Well, embedded insurance completely changes this paradigm because the customers are changing that paradigm based on how they want to buy insurance and what kind of insurance they want. And so the 50 plus years of traditional views of how we create a product and how we distribute that product and how we sell that product is going to be fundamentally changed, particularly with this next generation. So what is bundled embedded insurance? Well, it's really kind of three different areas. It is a model that provides the different coverages that you want, but it's tied to the purchase of some other type of product or service or on a platform. So Mike's examples of Tesla, Ford, and BMW and Volvo and many of the auto manufacturers, but now it's starting to actually be included in the purchase of other types of things. And I've got some examples coming up. It's a product that's not sold. It's bought because it's bought as a part of something else. And more importantly, it's really being a part of an ecosystem. So instead of thinking that the distribution is going to be maybe direct to the consumer or through the agent, and those are still very valid distribution channels, this opens up a wide array of possibilities by partnering with other types of industries and other types of organizations to actually share and distribute your product through those. So I think for the first time in a long period of time, we have an opportunity to really grow the business and really close that protection gap that exists out in the marketplace, whether it's on the property and casualty side or it's on the life insurance side. There is a protection gap out there across different types of things that people own or the way that they live, that we have an opportunity through partnering with others in an ecosystem to really meet that need. And what we did about a couple of years ago, we did in our consumer and SMB research, we really focused on it in terms of that behavior, that psychology is what's really driving simplicity and driving these different types of business models and different types of products, including embedded insurance. So traditionally, because insurance was sold and not bought, there wasn't really necessarily a high motivation. Yes, you can say for auto insurance, there's a motivation because you've got to have it to be able to get your auto registration. But for the most part, there's not a high level of motivation. And we've typically, it's been difficult to buy. Yes, we've got our websites to be able to do quotes and issue. We were sold through agents, but we didn't necessarily make it real easy to be able to do it. The more important thing is that the triggers out there weren't necessarily at the top of the list. So a trigger meaning that, oh, I need to have insurance along with this. So that it's an automatic type of a purchase that you're buying it rather than trying to sell it. Many of the new models, and you're going to hear from some of my panelists today, and in some of the, even the traditional insurers, are bringing out different types of products that are really kind of hitting these three different elements. So they're creating the motivation. They're making it really easy to buy because they're using data to be able to do the issuance in a really rapid period of time. But more importantly, it's the trigger. They're tying it to the triggers of things that are happening in our customers' lives that it makes it, yes, I need to buy insurance now, and I'm going to include it in the purchase of something else. That if we're able to move those all the way over into the high spot, we have an opportunity for real significant growth as an industry. So what are the customers saying? The customers are saying, and I've got charts here on the side, the arrows that indicate where embedded insurance really kind of plays in. They're willing to buy auto insurance from the manufacturer. They're looking to include it in the purchase of some major purchase. Maybe it's, you know, a home. It could be a purchase of some type of technology, a bike, whatever it may be. They're looking to add it into an item where they're at the checkout, at an online checkout. Wherever it is, they're willing to do it. And what's really important is to look at it from the younger generation of millennials and Gen Zs. Consistently, this group is at well above 50% or more in really looking to want to have the ability to buy insurance at those points in time. Much different than the older generation that's probably down in the 30 to 40%. And in some cases, they do get up to 50%, but it really is a generational gap issue. And once again, this is another set of those that are out there as well. What I wanted to share is in our most recent research on the auto and the life insurance is it highlights this even more dramatically, because we really did try to dive into specifically around auto and life insurance where people wanted to buy. And you can see here that nearly all of the areas on the left-hand side for the younger generation, with the exception of Facebook, 50% or more of them, up to almost 80%, they're willing to buy in other channels, in embedded insurance, etc. Much of a contrast to the older generation. And it becomes even more dramatic on the life insurance side, which is very interesting because we've often said life insurance has to be sold. You know, it is not bought. In this case, this younger generation is saying, hey, I want to buy it, but I want to buy it in a different way. And we've got to be open to the different types of possibilities. So when you think about it, is it all kind of a, you know, just a kind of a unique thing out there? No, it's real. And so what's on this chart here are some of the companies that we've been tracking are doing some really different things. So Zipcar, you know, when you have your membership with Zipcar, it automatically comes with insurance. You've got AXA with the Microsoft platform. You can run your small business, and cyber insurance is bundled in with it. That's through with Slice Labs. You've got Sure, the micro duration of life insurance when you're in air travel. The possibilities are pretty endless. You know, B Assurance, which you're going to hear from here today, provides, you know, buyer protection for different types of items, and risk with minis, you know, with the BMW group. What I would say is that you've got to open your mind to the possibilities, and you've got to completely kind of say, I got to quit thinking about this is how insurance has traditionally been sold. You got to think about flipping that model to say, how do customers want to buy insurance, and how do I make it easy for them to be able to buy that insurance and include it with it? That opens up real growth opportunities from a revenue standpoint and a customer relationship standpoint.
Hey, Denise, real quickly, we have a question from Michael. He says, in the UK, travel insurance was bundled in the bookings of holidays. At the time, it was seen as a hidden cost by the consumers, so travel operators had to unbundle it. Do you see any regulatory issues with bundled offerings?
I'm not necessarily saying that it's automatically bundling. I'm saying that they have the choice to buy it at that point in time. And I think that's the difference, that people are open to buying it at that point in time. Rather than automatically being included, that they see it as an additional cost. Obviously, when you're going to buy insurance, there's an additional cost associated to it, but they're going to make that choice themselves.
Yeah, and to the regulatory issue, I think, you know, insurance is regulated, so I think the net is, yes, regulators will be involved. Actually, I think I saw something that NAIC was starting to work on some of these embedded issues.
They are.
I don't know exactly where they are on that, but yeah, regulators are going to be involved.
Yeah, and I know, and I speak to a number of the state regulators because they read our research as well. They're very attuned to this next generation. They're becoming much more attuned to this next generation of expectations of how they want to buy insurance, the type of insurance that they want, and they recognize that those are their customers, that they're going to have to find a way to try to make it work, but do it in a way that it is going to be safe and valid for them. So finally, from our research too, we've asked insurers, you know, where are they at in moving forward? And you can see here in the on the left-hand side are the laggards, and on the right-hand side are the leaders. And in one category there for on-demand insurance, you can see that in comparison to the laggards, there's about, you know, a 5-point scale difference, you know, which amounts to about a 10% difference. So everybody's really kind of interested in it. What I would say is that I'm expecting this to actually grow in gap size between leaders and laggards, because as leaders begin to identify where they have that opportunity, the opportunities for the laggards, and in some cases the followers, to be able to set up those partnerships with other entities to be able to offer the insurance are going to become more limited. So we've really got to be able to start looking at that on a much broader basis going forward. And to be able to do this, you really need a new set of technologies that are really going to handle this kind of very digital, dynamic pricing, all of the different types of things that you need. And you can see here that many of those technologies are a priority for insurers. So if as I close here, really what you need to be thinking about, because we've got a set of customers today that you've sold business to, you sold products to, you want to have a speed of operation that you still want to be able to meet some of their needs out there. And they may want some embedded insurance for different types of events that they may be doing, or purchases that they may be having. But at the same time, this next generation coming up is much more open to embedded insurance than the previous generation. And you've got to look at that from a speed of innovation standpoint. How are you going to create a completely different business model and technology that's going to be able to support those types of products that are going to go out there, and to develop products that are going to use different sets of data and more specific data about those customers than maybe what you've done in the past? That's where you've really got to start looking at a different set of technologies and a different business model to really drive that forward and really have that two-speed strategy going forward. And that's something from Majesco we're very focused on with our solutions and being able to support that. So with that, I'm going to reference Mike's slide. The future of buying insurance will be embedded and it will be pervasive. If you look back in 10 years, I think we're going to be surprised at how far embedded insurance has come. And yes, regulation is still going to be there, but there's a huge amount of opportunity there, and it offers one of the greatest growth opportunities I can think of for our industry in a long period of time. So Mike, that's it.
Great, thank you. Okay, if you'll stop sharing your slides.
I am.
Be great, thanks. All right, so let's just do a quick round robin here. I think we've got a question here that kind of is a good kickoff point for this from Simon. And what he's asking is, you know, who do you think the major players are going to be in this? Is it going to be, you know, which companies do we think are going to be the winners in enabling embedded finance? Is it incumbents? Is it big tech? Is it existing insurtechs, new startups that don't exist today? So, you know, my cut is, I think we're seeing, you know, there's a great quote out there that says the future is already here, it's just not evenly distributed. I think we're seeing kind of movement across all of these things. I know that, you know, open banking in Europe is taking a little bit longer than everybody expected, but I think it is getting some traction. And we also know of people who are now working with our banking and credit unions to get that installed there. But let me start with Alex. Maybe you've got some thoughts about, you know, where do you think the winners are going to be on this?
Sure. I mean, full disclosure, I'm totally biased because we are an insurtech startup ourselves. So I'll say insurtech startups for sure are going to win, but no, I'm just kidding around. I think this is one of the most fragmented industries in the world. I mean, even like the top players that have been around for 100 years own, you know, small percentage of the overall market share. So it is a gigantic industry with the potential of having a lot of winners. But I would say in the short term, I think startups are better positioned because it requires nimbleness, you know, constant iteration of product and of technology, and really the ability to service a customer on the distribution side that's moving equally fast and nimbly, right? So I think really it's a combination of all three, where it's those that can be nimble but also partner with each other in the best way. We're lucky enough to have reinsurance and fronting carrier partners that allow us to move fast and have control over the parts of the process that they're traditionally used to having control over. Specifically with respect to the control of the customer relationship and the experience on the front end. So I really think it's a combination of all three, but really startups are better positioned in the short run to be nimble and address the need.
Cool. Uriah, thoughts?
I kind of think a little bit in the opposite direction, because embedded insurance really relies upon your partnerships and your relationships with other non-insurance companies. I think startups have a little bit of a headwind because they don't have the maturity and they don't have the scale to have those types of relationships. So I'm not discounting startups at all. They could move faster. They have newer ideas. They have more energy. But there's definitely something to be said about being a more established player that's able to do those kind of high-level CXO, you know, level C-suite type of relationships to get something through a partner and to work out any of the kinks without giving up.
So I'll push back a little bit on that just because of the fact that, you know, we've seen this all like happen all the time, where we are a startup, so we have startup risk in our own right. So when we talk to an enterprise level customer on the distribution side, typically we lose initially to a larger player because of the stability of you know, a Nationwide versus a Boost Insurance. But more often than not, they're doing that to test the market, to see what their customers' engagement with insurance will be. Because, you know, what they end up with is a click-through arrangement where they lose the customer immediately. It's not a truly embedded experience for their users. So once they figure out that their customers want to engage with insurance through their brand, they get a little sick of the click-throughs and losing that customer relationship, and they want a more embedded experience. And startups are much more willing to let them integrate rather than click-through.
Got it. Herman, do you want to weigh in on this?
Yeah, sure. Well, I'm also biased, but I worked for an insurance company for 20 years. So I think, yeah, I see both sides. And there are two very important parts. That's legacy and with whom are you doing your business. And somehow I'm very often reminded on the Kodak case. that in that case, in insurance companies, you make 99% of your business with brokers, so you don't fiddle around. And it's all about convenience, speed, availability, and yeah, hopefully nobody takes it serious, takes it bad, but insurance is still complicated, complex, and boring. And they won't tackle that. They can't tackle it because their products are like that. They're made for brokers. They have to be complicated. They have to be complex. So I think insurtechs play a role there to help also insurers to get into that business.
Yeah, and I was going to say, just given the partnerships that we're seeing with some of the major insurance companies and insurtechs who are doing this work, you know, people who are coming into the market as MGAs with backup from a carrier. I think we're going to see more of those partnerships, and I think that's the way the carrier is going to look to get into this marketplace. You know, we'll see what happens from a merger and acquisition standpoint downstream, but I think we're going to see that partnership that we've seen throughout the storyline of insurtechs and the incumbents for several years now.
Mike, I just want to add one thing. I agree with everything everybody said, but I want to emphasize a point Alex made, because it's probably the most crucial point. Anybody can be partnering, traditional with insurtechs with other insurtechs, fintechs, anybody, and we're seeing it out there. But at the end of the day, it's got to be about the customer. Mm-hmm. What does the customer want, and where do they want to buy it? We can't dictate that. We can try to dictate that, but that's going to limit the growth opportunity. And Alex's point about not wanting multiple click-throughs, that is an absolutely crucial point. They want a single kind of experience, and they don't care about all of the brands. It's how are you going to bring those brands together that's easy to use and relevant and transparent for me?
Yeah, thank you. I totally agree with that. The other thing I want to dive into the kind of next round of discussions here, which are, you know, what are some of the, I mean, we've talked a little bit about some of the example solutions out there. What I'm going to do is get a little bit deeper into what those are. But before we leave this discussion, I think the other thing that I see this is a tremendous gateway product, right? Back to the discussion we're having, Herman, I think as we were, before we actually launched into the webinar here, was, you know, the factor of trust. You know, bottom line is, if you can build trust by creating value and by creating relevancy here, you open the door to reach a customer and grow with them and have them grow with you, right, as their life needs and their business needs change. So to me, the other powerful part of this kind of offering is it opens a gateway to, as we talked about before, people who are either underinsured or not insured that we haven't had access to before. So I think it's a great opportunity for that. What I wanted to jump into now is just talk a little bit about, you know, this agent versus these non-traditional channels that we're starting into. Marie, do you want to take us into that discussion, and kind of what are you experiencing out there as we look at this, and how are people dealing with that?
So, I mean, it's a super complex topic. On the one hand, you have insurance companies that say, well, we already have our channel distribution strategy. We don't want to mess it up. So we're not just going to engage in new opportunities because we have too much to lose and we have too many relationships that we could possibly destroy. On the other hand, they're starting to think about, can we get agents involved in these new distribution opportunities, right? It doesn't have to be, oh, we're going to cut out our existing agency workforce and we're just going to go direct to consumer and eventually we'll move away from them. Can agents be involved, especially in some more complex sale? And that's what they're good at, explaining new insurance products, how they're priced, what the appropriate coverages are, but get that kind of lead generation through an embedded insurance product where somebody gets that pre-filled information, feels comfortable with the quote, wants to talk to somebody before completing it, and that maybe have somebody follow up with them. And that's where the agencies could really be used in this kind of new paradigm.
Yeah, I'm trying to remember who it was, but I was also seeing someone out there that was basically offering, maybe but it's basically offering agents and brokers the ability to white label some of this stuff and offer it as their own, right? Mm-hmm. So I think the net is that opportunity is out there. So I totally agree with that. Any other thoughts, Alex?
Yeah, I do. Yeah, we like to say that any producer of insurance in the future is going to be technology enabled. It doesn't matter if they are an insurtech startup, a traditional broker or agency. It doesn't matter. They're they're going to be technology enabled, and they're going to want back-end partners that are equally technology enabled themselves. It's not a matter of whether brokers or agents will exist in the future. They're not going anywhere. It's where do they work, right? So you can, an insurance broker or an agent or a licensed individual can work at Tesla just as easily as they can work at, Marsh. And so really that's going to be driven by, as Denise said, what the consumer wants. So if the consumer proves that they're willing to purchase insurance from Tesla, then you will see licensed brokers and agents working at Tesla. You don't need the human touch for every line of business, but you do for a lot. So if there is a, product warranty program or something along those lines, chances are you can get away with purely programmatic rating, quoting, binding, issuing. But if you're insuring your home that you live in with your family, you're probably going to want to talk to a person before you purchase a policy, right? So it's not a matter of whether they're going anywhere; it's where they work and what companies they work for.
Got it.
Yeah, and I would just add that I would advise that once again. Totally agree. Agents are not going away. Even the younger generation sees the value of agents because they do provide advice and they do provide some guidance and perspective. But we need to be much more open to a multi-channel environment because they're not always going to go through the agent. They're going to go through all these other channels that are emerging based on what's convenient for them and what is it that they're purchasing. And so we've got to look at how we're going to bring together and manage a multi-channel world that's to the benefit of the customer and all of the participants via the channels as well.
Thank you, Denise.
So sorry, I don't know about the situation in the US, but in Europe, definitely in Austria, we have another problem which we face. Brokers, traditional sales forces are 50 plus. Yep. We don't get the people. Yep. So that's one real problem, and that's one of the reasons insurers try to shift their sales into different into digital channels. So the products are still too complicated, and as an insurer, a house insurance is not a rocket science. I mean, despite you have a villa with a lot of arts in it, you need some consultancy. But for a for a small apartment with IKEA things in it, you don't need consultancy. It's a standard product. And I mean, that will change simply through the fact that we don't get the staff anymore. So it's a necessity.
Gotcha. Hey, we've got Herman, I have a question that I want to direct to you from Wesley. A little bit long, I'll try to read it quickly here. What's the opinion on B2C parametric insurance? And do you think, there's several questions here, do you think these fast payment claims will start competing with legacy carriers? Or will they be most prevalent in supplementing and partnering with current standard insurance policies? So I think there's two-part question there. One is about parametric insurance and then the ability to basically execute against those claims quickly. Do you see that taking place?
I'm the right one to answer that. We already introduced a parametric dental insurance. I think it's the first one in Europe. I don't think that the ability or I don't think that traditional insurers are, especially in Europe, are prepared to do so. They don't have the technical abilities. They're not used to it. They don't like it. It's most of the policies are very small, so you have to digitalize it completely, automate everything. I think it has a lot of future. We are developing things with parametric payments, but I'm very sure that it's necessary to have insurtechs to help incumbents to do so.
Cool. All right, and then final question in this topic area: what causes these business and partnering models to fail, and how do you avoid those? So we know, like Trove was in Europe, then they pulled out of Europe for various reasons. So Alex, can we start with you on that?
Oh God, you get me in trouble. I would say it goes both ways, right? So I would say speed is probably the #1 killer of these partnerships, because you have one side of the partnership that wants to move as fast as humanly possible, that doesn't always end well. Maybe that's, growth and speed at the, peril of profitability, right? And on the other side, sometimes there's a, overly risk-averse attitude towards what is being done, and they move too slow. So then I would say the speed is the disparity between what is an acceptable speed to market for new products and growth is probably the #1 killer of these partnerships by a mile.
Cool. Denise, any thoughts from you?
Yeah, I would say not. I agree with the speed, but I would also add a couple other things. Flexibility. Because you're going to kind of come into this thinking, oh, it's going to work this way to kind of engage customers. And you've got to be able to be flexible to kind of alter the product or alter the approach or alter the partnership to be able to make it work. A lot of these are going to be very experimental at finding the right way to kind of engage customers and to get the buying process moving. And so I think being open and being able to be very flexible and adapt quickly to how the product and how you're going to engage, that has to be really top. And that then gets to the technology, making sure you've got technology that can quickly adapt to that. And it's kind of that MVP approach, minimum viable product, and getting it out there and getting it working in that arena.
That's a really good point, actually, because it goes along with the speed aspect too, for us, at least personally, because when I talk to like a venture capital investor for our own purposes, right, they're like, why do you develop your own insurance products? Doesn't that take too long? Why can't you go sell a renter's insurance policy from whatever carrier? And I go, no, you don't understand. It takes a little longer in the short run, but it gives you the flexibility in the long run to iterate on the important part. It starts with the product, no matter what anybody says in this industry. So we go through the brain damage of creating our own customized insurance products so that we can have that level of control with our partners that know the customer better than we do. So it's hard in the short run. It takes longer and slower than our VCs would like, but it's the right way to do it for the longevity of the business and the customer.
In our experience, I've found it crucial to have sales from your partner in the team.
Yep.
Otherwise, they always find some obstacles on the way. That's very important. And the second thing, having sales within the team, we always had good results when we worked on the reasons. Why do they like to embed insurance? Because that's so important to give them the idea why they do it. Is it to earn money? Is it to make the product better? Is it to compete better? And those are sometimes very different ways of looking at the product, looking on how you embed it, and making the whole project useful for everybody.
Got it. Uri, you have...
Yeah. So some of my answers have already been stolen. Iteration is key.
We'll give them back to you.
Thank you. I appreciate that. I think insurance is the only kind of major product line that doesn't have this concept of test marketing. Insurance companies say we're going to build this product and we're going to launch it, and if it doesn't work out, then we're just going to cancel it. While everybody else says, let's test market in Kentucky and see what the response is, and then as we go national, we'll change up the approach. So I think there's a lot to be said about how do I take this product and figure out, is the product not working, or is the partner not working, or some combination of the two? Can we start off small in a small scale and figure out what's attractive and what's not attractive, and then as you expand it, iterate and improve that.
Cool. Okay, so thank you guys. If it's okay, I'd like to move to the next set of next topic here, which is, what does it take from a technical standpoint to deploy this stuff, and what do we need to pay attention to? And I think Denise, you set us up with some of that. So if you want to just recap a little bit on that, and then let's hear from the others.
Yeah, I think it's a set of different technologies that really get to a platform approach. It's obviously cloud. It's going to be technologies, no code, low code, digital, the ability to bring in new sources of data, whether it's IoT data or it's other types of data that's out there, and being able to do it in a real-time, dynamic type of way. And I think one of the more important parts is how do you do that also with an ecosystem of not just partners that are going to be your sales, but also partners who are also providing capabilities or data sources that you can really do that on a dynamic type of approach. So it really gets to that whole true cloud-enabled digital platform that's really going to transform this.
Great, thanks. Alex?
Yeah, I would say there's a couple of things that are just table stakes these days, just in 2020. There's cloud, there's APIs, right?
Yes.
We're low code, not no code, but there's a huge need for no code out there. What our partners are doing, we don't partner with like lead gen platforms or anything, or core comparison sites. These are companies that are building a meaningful business in the insurance vertical. So they want control over that front end, whether it's front end that their brokers or agents are interacting with internally, or their customers are interacting with on the front end. So it's important for us just to be a wall of code that they can integrate with, and give them the flexibility on the front end. And then data is key. When we talk to like fintech partners, the merchant acquirer payment processors, they have so much data on these businesses that they partner with that's immediately applicable to insurance, right? It eliminates a huge uncertainty factor in pricing, things of that nature, that being able to allow them to control the front end plus apply their very unique data to pricing and underwriting is really important.
Great, thank you. Hey, I just see Evangelos online. Evangelos, thanks for joining us. Could you reping what statement you wanted to challenge? Because I didn't catch that in time to figure out exactly what statement you were challenging. So if you could do that, then I'll have the guys take a crack at your questions. So I think there was another question from Simon about, what role do open APIs and play in this huge, right? At least my cut is that's a really important thing, particularly as we move forward. But I want to get a quick answer from, let's start with Yuri on that one.
So I think it completely depends on the sophistication of the partner. Some partners have, deep technology teams and are willing to work with you and do a full integration, so that it's not just embedded, but it's actually part of the process of whatever else they're doing. The problem is with that is that you're really limiting yourself into your selection of partners. You'd have to have a very motivated, good engineering team type of partner. There's another approach, which is to say, well, how we're advertising now, and we're putting up, ads on a bunch of different types of partner websites, and it's really easy for them. We just give them, something really simple to stick on their website. Can we take that same approach for insurance? And for some partners, the API approach makes sense because they want something a little bit, really, really integrated, and you're a bank and you want this as part of some other process. And for some partners, it'll be like, what's the next level after advertising? Let's embed an insurance product and not have to do some kind of deep integration, which we don't know if it's going to be worthwhile and pan out, and it's going to be too expensive.
Gotcha. Denise, any thoughts?
I would just say that, it goes back to flexibility and adaptability. And, the point about APIs, the point about cloud, all of those things are really crucial to give you some of that flexibility and adaptability. And if we're going to be trying to do MVP testing of products, you're going to be trying to work with different partners. Having that flexibility is going to be absolutely crucial, because nobody wants to play the same way, and different customers want to play in a different way. So once again, I'm going to go back to the technology needs to be able to do speed, agility, and also allow you to kind of adapt on the fly and adapt to the different partners that you're working with.
Got it. Thank you. So we've got another question here from Roger, which is, I think we've answered this for the most part, but where do you see the bigger need for enabling embedded insurance channels? Do you think brokers, agents would be better to sell these to those channels on behalf of carriers, or for the carrier to enable partnerships with, directly with a digital partner? I guess, from my perspective, I don't see the agent taking on that kind of, maybe, a large one, but I don't think I don't see them as equipped to handle that dialogue and be discerning about who they want. It's not their job, right? It's not what they do. So I don't see them as being a broker into these channels, but I could be wrong. And you guys thoughts on that?
I think program administrators. So if you're a larger broker and you want to set up a program business, that's a really, really good fit for embedded insurance, because you probably already have a target market. You have the insights on what that market needs. You have the ability to customize it because you have a better understanding than the carrier does, and you've already have those relationships. So I think that's a crossover where you have this kind of ideal potential of, let's take the best of the broker world and the best of the carrier world and align that with a new distribution model.
Gotcha. All right, then let's move on to the kind of the final discussion, which is, how do you go about defining the business case for this, why now, and presenting that internally to get buy-off on moving forward on that. So let's start with you, Alex.
Sure. It depends who you're pitching, right? If it's the insurance side of the market, this is the future. It's everything Denise said in her presentation. I mean, this is the way it's going into the future. On the distribution side, it's a little bit more complicated because we get a lot of inbound, and that's easier because they've already explored insurance as a vertical and they want to build into it. When it's outbound, you're pitching against doing nothing, right? Like it's like, do we want to build into the insurance vertical or not, right? So you're actually just pitching them the value proposition. You're getting them over the hurdle of compliance complexity, or if they're in financial services, do they really want to add insurance regulation and oversight to their business? That's the type of hurdle that you have to get over with the distribution side of the market. But I think the insurance side of the market has pretty much come around on this trend and their need to lean into it.
Great. Herman?
I felt the key block is premium. So you discuss it as the price for the product, you discuss it with the number of clients, you discuss it with the retention rate, and everything.
Did we lose Herman? Are you guys there?
Yeah, I'm here. He froze.
I'm here.
Okay.
Herman froze.
All right. Ray, you want to take a cut at that?
Yeah. So I think everybody understands the opportunity on the sales side. I think there's another opportunity which insurance companies might gravitate towards a little bit because they understand it better, is on the underwriting side. So there are a lot of insurance carriers that specialize in being like the low cost provider and being like able to compete against in pricing, when you have a competition. But that leads to worse underwriting results. So if you could get your product out there so that you could pick your cohort of customers, and that determines your underwriting results. So you could say, we're not going to be just, come to us, we're the lowest cost, or we have the best advertising campaign, but I could figure out where my customers are that have the best underwriting results and market selectively to them. I think that's an opportunity for embedded insurance that an insurance company would appreciate a lot more than maybe other market participants.
Great, thanks. So I want to go back. Evangelos just put his question in there. So I want to read this out because I think it's a great one. So there was a statement that brokers are here to stay as they are relevant for consumers. The question is rather how they increase complexity, whereas consumers are looking for a better experience. It's not about the most complex product and service experience that can be only delivered by brokers. It's more about the consumer experience, and some of the distribution touch points will definitely change over time, making to some extent brokers less relevant. So that's more of a statement from him. So I don't know if you guys want to respond to that. I kind of align with that.
It depends upon the insurance product. I think you've got some very large commercial, complex commercial products. Those are going to be very difficult to sell direct online because there are so many different factors that go into the underwriting of those products. And so that's where I think that the brokers really fit in well, is in those much more complex type of arenas. When it's direct to the consumer, I would say if you're talking to the consumer, he's spot on. But I think that there's a, it goes from complex to simple, and there's everything in between. And I think as we get more sophisticated at how easy it is going to be for consumers to do it, it begins to bleed into the more complex type of products that will have to be much more digitized in the way that consumer-based products are. We're seeing that in other industries as well, but it isn't necessarily going to happen overnight.
Yeah, I see it very simple. The client orientation of insurance companies is directly to the brokers. The products are like that. The whole organization is faced to the brokers, and the end client is not relevant. So as soon as you make the products easier, and that will have to be changed because we talked about it before. Convenience, speed, availability is important. And today, somehow buying an insurance is a nuisance. It's so complicated, unnecessarily. So I think that will change, and as soon that will change, the role of the agent will be completely different, because if it's a very easy product, don't need that kind of consultancy anymore. Just to give you one example, a simple car insurance in Austria has about 4 times 4 times 4 variations, which nobody needs. And of course, if the product is so complicated, you need advice, but you could make it much easier.
Yeah.
Yeah.
Mike, I was just going to comment on the previous question, you know, with regard to the opportunity out there. As an industry, there's a lot of data out there that suggests that there's a lot of gaps in protection coverage, whether it's for property or if it's for individuals, you know, everything in between. As an industry as well, we don't really grow that much. You know, our revenue growth from a premium standpoint, if you look at the Swiss Re reports and you look at, you know, the III, you know, it's maybe 4 or 5% at best. And we see a lot of churn sometimes, you know, that we're chasing the same customers, you know, we're going with this lower price, et cetera. I think that if you step back and you look at it from the customer perspective, particularly this younger generation, we have an opportunity to actually grow our industry and the premium in the industry if we are open to a different type of model, the types of products, such as the embedded, because there is a lot of opportunity out there to close the gap of protection coverage. I'm just going to go back to that again. Instead of chasing what everybody chases, chase something new.
There you go. All right. Well, listen, we're almost at the top of the hour now. I really want to thank our panelists. Let me bring up my slide deck here real quickly. There's a couple of questions we weren't able to get to. We'll try to get to those after the webinar is over. So let me get the slide deck loaded. Come on, Google, you can do this. So again, thank you to our great panelists, great answers, great insights. All of us are available on LinkedIn. And all of us would be glad to engage with you individually on any topic you like. So please do reach out to us. Again, I'd like to thank Denise and Majesco for sponsoring this work. Much appreciated. As I said earlier, this is part of our overall Innovation Trailblazers webinar series. There's others out there. Please go check that landing page out. There's a lot more great things coming up. So I'd love to have you guys step in and be a part of that as well. Also, we're in the process of launching a global innovation community platform and marketplace. You can check that out at newtechmatch.com. We'd love to have you be part of the beta, but we'll actually be going live in September now, according to our software development team, who told me it was going to be August, and before that, never mind. So anyhow, we'd love to have you be a part of that. And thank you guys, one and all. Any parting comments from anyone in terms of why this, why now?
Thank you for organizing this.
Cool. That's
Thank
it.
you.
Yeah, so I, you know, just to wrap, thank you guys very much. I think the why this, why now, I think this is a future. I think it's a gateway. I think that if you don't move now, you're going to find other people that are in those trenches ahead of you, and you'll get the left behinds. I think this also is an opportunity to really focus in on making insurance simpler, easier, and more relevant and easy to understand, and creating more value with it than we have in the past. And I think that's a great learning lesson for all of us that can be applied to the other products that we do as well. So that's why this, why now, from my perspective. Thank you guys all. Appreciate it, and enjoy your weekend. Cheers.
Thank you.
Thank you.
Thanks, Mike.